Is it recording? Okay, I think let's now go on. Now, of course, there are many theories. We have said that there are many theories which have addressed the challenges of governance of firms and companies from time to time. And some of the theories we will be looking at is we have the agency theory. I don't know whether I should go ahead and still look at the same theory, but I'm sure that we did this during our last session, and we said that under this theory, there are two parties. One is the principal, and the other one is the agent. The principal is normally the shareholder, the owners, and the agent could be director or a manager. So depending on a case, because I know later on we shall look at some different relationships, agency relationship. It is important that you understand that the theory defines the relationship between the principals and the agents. Now, according to this theory, principal of the company hire the agents to perform work. So it is the principal who is hiring the agent in order to perform the work. The principal is going to delegate the work of running the business to the director or managers who are the agents. The directors or the managers are the agents of the shareholders, and the principal expect them to act and make decisions in the best interest of the principal, actually in his best interest. So that's what we are saying, that the agents are supposed to act in the best interest of the principal. Now, on contrary, we are sure that at some cases or at some instances, they may not be able to perform in the best interest of the principal. And in that case, the agent may be succumbed to self-interest, may be succumbed to opportunist, may be succumbed to a short of expectations, where is not doing what is expected. So in that case, that can lead to separation of ownership and control. So that is why we usually see we have agency problems arising, which we'll talk about them again a little later. So I think that is it for the theory. Now, I want to go ahead and look at the areas of disputes in agency theory. I don't want to dwell much on this theory because I know you understand. Just allow me to talk about some of the disputes in agency theory. Now, there are two key areas that we will focus on. One is a difference in goals. This is one of the dispute, a difference in goals. And secondly is a difference in risk aversion. So these are the two disputes that are normally addressed in agency theory, the primary disputes which are addressed. Now, for example, on the first case, that is the difference in goals, a company executive with an eye toward short-term profitability and elevated compensation may desire to expand a business into high-risk market. And however, this could pose unjustified risk to shareholders who are most concerned with the long-term growth of earnings and share price appreciation. So in simple terms, what this means is that we might have a case where the company executives, the directors, they have interest in short-term profitability. And you know why they're doing this is they are trying to secure their job. That is their main thing. What they want is to continue having the job. So they don't want to find themselves losing track of their job. And in that case, they will focus much on short-term profitability. When you look at the other side, the shareholders who are the owners, their interest is to have a long-term growth of earnings. So they are focusing on long-term goals. And in that case, that difference in goals can bring what you call a dispute. It can bring dispute. Now, the second part is has to do with the difference in aversion. We are also saying that also incompatible levels of risk tolerance between a principal and an agent. For example, shareholders in a bank may object that management has set the bar too low on loan approvals, thus taking too great risk of defaults. So in this case, you find that the shareholders in a bank, they have an objection that management has set a bar too low on loan approvals. Now, this objection or this kind of suggestions can call to what we call a great risk. It can be a great risk to them because they don't want the bar maybe to be too low. They want the bar maybe to be too high. So due to this objection, that can lead to a difference or what you call dispute. It can lead to dispute because this is a difference in a risk aversion. So it just has to do with trying to escape risk in that case. Yes. Now let's look at the different agency theory relationship. We have different agency theory. So these are supposed to be different agency relationships. And we are going to see that the first relationship is where we have shareholders and company executives. I know that there are many relationships, but we have shareholders and company executives. Now we know that in this case, shareholders, they are the principals. Company executives, in our case, are supposed to be the agents because they have been hired by the shareholders who are the owners to do what? To perform their task in their best interest. So you find this is a relationship. This is actually a relationship. We also have investor and fund manager. Now, the investor is the principal, whereas the manager is the agent. Now, investor is the principal because they are giving a portion of their income to the fund manager who is going to allocate on their behalf. The fund manager, we have said in this case, is the agent. So this is a relationship, agency, the relationship we can talk about. We also have another relationship where we have the board of directors and the CEO. Now, on behalf of the shareholders, the board of directors is the principal. So we have always known that the shareholders is the principal, but in this case, we have the board of directors who is representing the shareholders. So in that case, or in such a case, the board of directors is the principal, while the CEO is the agent. Now, we are saying that the CEO is the agent because he's hired by the board of directors to manage the day-to-day operations of the company. And if the CEO were to make a wrongful financial decision, which can put the organizations at a disadvantage, then the board of directors is more likely to vote them against in the next election. So if they are not doing what is expected, they are leading the company to default, then they can be voted out during the next election. Now, on the other side, if the CEO has to introduce new business sector which are provided or that provided unprecedented innovation in the market, they would be praised by the board of directors and would likely stay in power for years. I think you've understood this, where we have the CEO doing what is expected, coming up with a new business sector, Yes. So in that case, this is an innovation actually, and is going to uplift the company or make the company to be in a better position, and the return is usually praised. They are normally praised. They will be praised, and they are going to stay in power for years to come. So that is a relationship. We have the board of directors and the CEO. Yes, so we move on. We can talk about causes of agency problems. What are the causes of problems that which may arise between the principal and the agent? What are some of the problems that can arise? Now, one of the problem is the conflict of interest, which happens between the principal and the agent, and the managers, because managers are the agent, they pursue personal benefits. Now they have their self-interest, like building an empire, you know. Other benefits are like perks. They focus on some benefits, isn't it? Or they focus on some incentives, instead of maximizing shareholder wealth. So you see, in such kind of a case, there will be a conflict. This is one of the cause of agency problem, where the managers who are the agents are pursuing their personal benefits instead of pursuing the organization's what benefits, Yes. So in such kind, we have is a cause of agency a problem. Another cause is what we call confidentiality breach regarding the personal and financial information of the principal. So where the agent, the managers or even the directors are going to breach confidentiality, which is regarding personal information of the organization, financial information of the organization. So you find this can lead to conflict. This is one of the agency problem. Another one is when the principal act against the recommendations provided by the agent. So an agent can give a recommendation to the principal, but again, you find that the principal is acting against it. So this is a cause of agency problem. Another one can happen when we have insider trading with the information provided by the principal. Now, insider trading can come in cases whereby we have we can have some kind of information that has not yet been published. So, like we can have an information which is proposing buying of our shares. So when the agent, who can be the director or the managers, gets this information and decide that because this information has not been published, I'm the one with the information, what I will do, I will buy the shares, so that I can benefit. You see, this can lead to a conflict. This is an agency problem. So insider trading is one of the cause. Another cause is when the agent is making decisions on behalf of the principal, which is not in the best interest of each party or each associated party. So when you have an agent making decisions on behalf of the principal, and those decisions are not in the best interest of each of the party, they're not going to, the decisions are not agreeing, the parties are not agreeing with the decisions, then this can lead to a problem. Finally, we have lack of independent agents or directors, or poor audit mechanisms can allow managers to access or it can allow managers to act without accountability. Now, let me explain this. When we have a lack of independent agents, independence comes in when you are performing your task without being affected by outsiders, without listening to anyone. So when you have lack of this independence, then that can lead to what? conflict. It's a cause of agency problem because, now that is not what you call accountability. It is not what you call accountability. So that is one of the cause of agency problems. And now these are the causes. These are some of the causes. I know you can get more causes of agency problems, but meanwhile you can have those points. Now, how do we reduce these agency problems? How can we reduce them? How can we reduce these agency problems? So there are some measures which can help us reduce the conflict, and one of it is transparency. So this is crucial for both the principal and the agent to be completely and transparent with one another. So transparency is for the both parties, not just one party, for the both parties. Decisions and transactions that will be implemented must be agreed upon by each party and must be reasonably fair. So if we have a decision or if there is any dealing, a transaction, it must be implemented. It must be agreed upon by each party or the parties. And we are also saying that it must be reasonably fair. So that is what we call transparency. And we are adding and saying that once transparency is present, when we have transparency now, conflict is reduced due to the fact that there is less confusion on decision making, and you also have fewer implications that one party is against the other. So transparency is one of the measures which can help us to reduce the agency problem or the conflict. The second way or the second measure is restrictions. We can have restrictions. Restrictions can be positive or negative. Yes. So we are saying that imposing restrictions or abolishing negative restrictions is a good way to significantly reduce the effect of agency loss. Now, when you set specific restrictions on factors like agency power, then this will allow the principal to feel more confident in their relative agent. Conversely, we are saying that if you are going to abolish the negative restrictions, then this is beneficial because it instills trust within the agent and allows them to make decisions freely on behalf of the principal. So restrictions are also important. Is also one of the measure, one of the way in which you can reduce agency problems. Finally, we have bonuses. Bonuses. Now, if you are going to introduce bonuses, this is a good way to motivate an agent, and it will allow them to make decisions with the best intentions of the principal in order to achieve their desired incentive, in order to achieve the principal's incentive. But sometimes we usually say that the bonuses can as well not be good. At some point, they cannot be good because you find that the agents are chasing those bonuses instead of acting in the best interest of the shareholder, instead of doing what is required in order to achieve the organization goals. So sometimes those bonuses can be good or they can be bad. So it depends on how you use them or how the agents are going to perceive them or take them. So that is what we call the agency theory. The next one we are going to talk about is what we call UT. Can somebody pronounce for me this one? It's coming from the word utility because it's one of the theory that we are going to talk about. Can somebody read for me this? Yes, anyone?
Which one do you want us to read for you?
This second theory.
Utilitarianism.
Yes, yes, that is okay. That is okay. It can be a bit tricky. Yes, thank you for that. Just to mention, and I think I have a video from YouTube I will share with you. Maybe you can follow up on this theory. It's a rule actually. Now, utilitarianism theory is the one we are talking about, and we are saying that it is a normative theory of ethics, which states that the ethical and moral justness of an action depends only on the consequences of that action. So it depends on the consequences of that action. Now, an action in this case can increase everyone's utility. So we are saying that an action that increases everyone's utility is more morally and ethically just. So it is a just action. So this is a good, it's a good thing. It's positive. Now, whereas we are also saying that an action which decreases everyone's utility is morally and ethically unjust. And you might be wondering, what is this utility? Now, utility is a term that is used by classical ethical theorists and philosophers to describe happiness and well-being. So I want you just to understand that utility, in this context, it means happiness. This is the main thing to note here, happiness. Yes, so it means happiness. So if you can get this as happiness, then you can relate to what we are saying, that an action which is going to increase everyone's happiness is morally and ethically just, whereas an action that is going to decrease everyone's happiness is morally and ethically unjust. So that is what we are saying. So that is what this theory focuses on. Now, at work, you display uh, utilitarianism when you take actions to ensure that the office is a positive environment for your co-workers to be in, and then you make it so for yourself. Now, there are three generally accepted axioms of utilitarianism, which says that the first one says that uh, pleasure or happiness is the only thing that has intrinsic value coming from inside. Pleasure or
brother,
happiness.
how are you? Salam, salam. Hey,
Yes,
nilikuwa class.
Lawrence, you can unmute yourself.
Class.
Yes, kindly unmute yourself. Thank you. Now we are saying this, that we have these generally accepted axioms for utilitarianism. And the first one says that pleasure or happiness is the only thing that has intrinsic value. That is the first axiom. The second one is stated that actions are right if they promote happiness, and they are wrong if they promote unhappiness. So you see now this is taking us to the previous descriptions that we have looked at. So this theory will focus much on happiness. Yes. Finally, the last axiom states that everyone's happiness counts equally. So everyone's happiness counts equally. So these are the three generally accepted axioms for utilitarianism theory. Now, we are also saying that utilitarianism is the most common approach to business ethics because of the way it accounts for cost and benefits. So it accounts for cost and benefits. And we are also going to look at the two types of utilitarianism, or the utilitarianism ethics, which are practiced in business world. So the first one is what you call rule utilitarianism, and the second one is called act utilitarianism. Let's look at the first one. Rule utilitarianism helps the largest number of people using the fairest methods possible. So it helps a large number of people using the fairest method possible. Now, the second one, which is act utilitarianism, makes the most ethical actions possible for the benefit of the people. So this is about the actions, isn't it? Yes, this is about fairness, ensuring that it has helped people using the fairest method possible. And this one will help people using what you call ethical actions, using ethical actions, just from the initials of the utilitarianism. So these are the two types of utilitarianism. Now, this theory has faced a number of criticism, which we are going to talk about. So we can talk about criticism of utilitarianism. There are a number of them. The first one is, these are limitations. These are limitations. Sorry for that. I am seeing a warning that our session is going to end in a few minutes. So I think I will try as much as possible to conclude on this theory. Yes. So now what we are saying is this, that the theory utilitarianism has faced a number of issues, a number of criticism. One of it is human happiness is impossible to quantify. So it means that we cannot quantify human happiness. And this is true. So that is one of the criticism. I will share with you the explanation. Now, the second one is aggregate measures of happiness ignore distributional aspect. Now, this means that we are ignoring, or the theory ignores minority rights. It focuses on the majority rights. It ignores the minority rights. And another criticism is that the motives behind actions are also ignored. Now, for example, we can consider two individuals, A and B. We have named our individuals as A and B. A has donated 100 shillings, whereas B donate 1,000 shillings to a charity. So these two individuals are donating money to a charity, isn't it? Now, suppose individual A donated the money because he wanted to help the charity, and individual B made a donation so that he could improve his own standing in the society. So you can get the differences between these two people. Individual A donated the money because he wanted to help the charity. Individual B has donated the money because he wants to improve his own standing in the society. So we have there are differences between these two people. Now, according to utilitarianism, they will consider individual B, what individual B has donated, to be superior instead of what individuals A has donated towards the charity. So they are considering B, the ones who has donated 1,000 shilling because he wanted to improve his standing in the society. Now, that is despite the fact that it was made with an ulterior or less noble motive. So you can get the difference between these two people. The first one donated money because he wanted to help. The second one wants to improve his own standing in the society. So the second one wants to make himself kind of happy, isn't it? Yes, wants to gain fame, Yeah. So in this case, according to the theory of utilitarianism, they are going to consider individual B. Now, finally, we have this criticism, which says that conflict with justice and fairness. So this is another criticism. There is conflict with justice and fairness. It conflict with justice and fairness. And we are saying that outcomes may be efficient but unfair. So you can say, for example, shareholders gain while workers suffer. So that is what you call the criticism of utilitarianism. So we've talked about a number of criticism. Yes, so I think because of time, I'm not able to proceed further towards what we have reached. And I want us to stop at this point. In our next session, we will begin with legitimacy theory, and we'll still continue looking at the rest of the theories. But immediately after the session, I will share with you this material so that you can also look at them. Yes. I don't know whether anyone has a question because our session will end in the next 4 minutes. Anyone with a question? Yes, silence means you're okay. Yes, so in that case, let's end our session at this point, and thank you for joining the session for today. We are just apologizing for the few inconveniences that has happened, but you can bear with us. Yeah. So let's end our session at this point, and I wish you a nice time.